Hey, what's happening, guys? I hope everybody had a good day today. We're going to go over the trades I took today. Another relatively active day for me. But I want to share something with you real quick. Last night I spent an hour and a half talking to a trader who was at WT Warrior Trading when I was there, and joined me when I started this room, this community. And now his sub was coming up for renewal in a couple of days. So he tells me he spent over $10,000 the last couple of years trying to learn how to trade, and he just can't seem to get it. He says he feels closer than ever after this year in the community, but he's just not there yet. And he says it's just been too long with no positive results. And he says, I want to renew because I feel good about you, and I feel good about what you're doing, but I need you to sell me on your service. So I immediately said no. You need to sell yourself on you, because all I heard was I paid for this, I paid for that, I paid for this, but what have you done? And that sparked the conversation that lasted like an hour and a half. But what's funny is that we look to others to sell us on a guarantee, but we're not willing to hold ourselves accountable to do our part. Like, if you bought this trading course and someone gave you a 90-day guarantee that you're going to be making profitable trades within that time frame just by taking this course, then at the end of 90 days, you're still losing money. The first thing you're going to do is send them a stern email saying, hey, it's been 90 days. I'm still stuck in this rut. I'm not making any money. I'm still losing money. I want my money back. Your strategy is just not working. But how many of us, before we make that move, will stop and take a look at ourselves and ask us, what have I done in these 90 days to try to make this happen for me? And if you determine that you didn't do your part, would you demand a refund from yourself? Would you be able to look in the mirror and say, I let me down? Or are you going to take the easy way out and put it on somebody else? Are you brave enough to look at yourself in the mirror and say, I'm not putting in the work. I'm not following my trade plan. I'm not managing my risk. I'm not putting in 110% to get this done. I'm falling short. And the reality is, this is what it's going to take to get it done, guys. I'm not lying. Not buying the latest course or following the latest person to post they're making a lot of money and they have this system that you just can't mess up. I mean, I know this. I lived it. I've been down that road. So, when I get these messages, or talk to somebody and they're telling me, what this guy told me, or, they say, Ed, you didn't do what you said you were going to do for me. I'm not getting consistent with my trades like you said I would. And I'm asking them, well, what are you doing? Are you just sitting back listening to me, or what are you doing? Because if you're not doing what you need to do, how am I going to do what I need to do for you? It's not going to work. So the bottom line is, you owe you. Each one of you guys has what it takes inside to make it. Some it may be harder. It may take a little longer to find it, but it's there. And I can help each and every one of you find it, but you have to be willing to do your part. It's just that simple. You have to be willing to put that 110% in and fix your schedule to where you can have time to work at night or work in the morning or do whatever it takes to get you to that next level. because sitting back watching videos, taking notes, buying this class, buying that class, it's not going to get you there. You could spend $100,000, and unless you put some sweat equity in it, you're not going anywhere. You're just going to keep going in the hole. So make sure that you're able to look in the mirror and point a finger at yourself sometimes. I try to set the example every day in chat when I mess up. If it's my fault, I accept responsibility. Even if it's not my fault. If I had internet problems or something messed up and it caused me to do something that I didn't want to do, I still take responsibility for it because I'm the one that made the decision that I want to be a trader. And I have to accept everything that can happen. So that's why I say I know for a fact, if you're going to be successful, if you're going to be consistently successful, this is what it's going to take. You're going to have to start holding yourself accountable for doing the things that you need to do in order to take advantage of the courses, the information, and all the opportunities that will come your way. All right, so let's take a look at my trades today. Well, I put this chart in here, the NVDA. I didn't trade it, but I want you guys to look at the price action that you want to stay away from. If you are a new trader or even an intermediate trader and you're trading with a smaller account, these are the trades you want to stay away from. These are massive candles that even trading 50 shares and you're trying to keep a relatively close stop will stop you out every time. And you want to recognize this. Now, I know you can't really see this until, after it's printed. But what I like to do is use the market replay simulator. You can watch Trading Sim. They have a pretty inexpensive subscription there. Or if you have Thinkorswim, you can use the market replay feature. But go back and replay and watch this price action at the open. And you're able to determine what price action you'll be safe trading and what price action you want to stay away from. So you look at stocks that are on your watch list, like NVDA was on our watch list. And yesterday, it made a nice move up. Real nice, smooth move. But today, it was really choppy and had some big swings. And it will stop you out. But if you're going to play this, if you just want to take a chance, you would not trade it off the wick here. You would trade it off the body. So as soon as we break the body, you get in, and you better be ready to take profit, at whole and half dollar marks. Because this can move pretty quick, and if you don't hit it when it gets there, if you hesitate, you can move. So these are really tricky. Sometimes you see me lose on these because I'm moving a little bit too slow. But just wanted to kind of point that out to you. Wynn was the same way today. Look at this candle. This candle is telling me stay the heck away from me. Look at this candle. Look at this one. All of these with these prolonged wicks is telling me this stock is real volatile and it's best to stay away from it until it settles in. And that's pretty much what I did today. I tried to trade this, using the longer time frame, but I did botch that up. I was trading it in my swing account and didn't do as well as I had anticipated on it. But we'll look at that trade here in a few. But I just wanted to show you the type price action that you really want to stay away from, and you don't want to trade these at the open, because they will stop you out. So if you have the ability, go back and watch these two. Watch the open. I know in on demand you got to wait a couple of days, but I just want to give you these examples. It could be something you can watch this weekend and just watch how the price action moves, so you'll know which ones to stay away from. All right, KORS was another one on my watch, and you can see we were gapping up, well up over where we closed the day before. And this was a previous high here, the 68.32. We were all the way up. So we were pretty overextended. So I didn't think we had a whole lot of room to the upside. And typically when you have a big gap up like this, you're going to have profit taken initially. And we're going to get, that pull in. Now sometimes we pull in, and I felt that if we pulled in, we would pull into the 68.32 level and potentially bounce back and keep going. And that was one, thesis. The other one was we would just keep selling back down to the 20 or red to green, and potentially, start going back. But this is the daily chart, and this is, you eliminate this candle. This was a previous candle from Tuesday, and we're trading up here pre-market. So pretty, exciting. And this is why I picked this one out of the 4 that I had on watch. This is the one I thought would give me the best potential. So let's see how I traded this thing. So at the open, it was really selling off, and I expected it to sell off, because any stock that gaps up like that, like I said, you're gonna have people that were long. This is where the professional traders sell into the inexperienced traders. And so I sold here, shorted it here. And I was a little bit late getting in. I was trying to convince myself that this is exactly what I'm looking at. It's going to, tank at the open, catch that volatility. This could easily, put in $3-4 candles. But I hesitated. I got in a little bit late and pretty much caught a little piece of the move. I didn't catch the meat of this move. But I just wanted to get, some quick, good profit to get the day started good. And, we did that. So once I got out of this, I said I was going to sit back and wait, catch the 5-minute opening range breakdown. And that's what we did here. It started open. Once we broke the 5-minute opening range low, I was in. First target was the 200 here. The second target was going to be, red to green. Well, what happened was, and then the final target was going to be this 65.13 or, 65. But what happened was when we opened, this candle opened, we started to make a run up, and we pulled back. And it just was chopping around a little bit. So I went ahead and lightened up, thinking that we may be bouncing and pulling back over the 200. But we didn't. We sold off. And instead of me taking it here, I really should have taken it here, because I had this early cover that kind of took this level out. And I didn't. I was just holding for more. Just trying to be a little bit greedy. And once we started to recover, I had to take it off. I noticed the shift in momentum. Reading the price action, once you get to a certain point, you'll be able to determine shifts in momentum. And when you feel it and you see it, it's best to get out. Now, yeah, it can fake you out. The markets are highly manipulated, but if they weren't, it'd be hard for us to make money. But, in this case, I noticed we made a higher low here. I was looking at the 2 minute, we were making higher lows on it. So it was time to get out. And you can see that was the perfect time to get out. So real good trade here. And, I don't watch my P&L, but somebody in the room calculated this for me and told me exactly what I made. And, that does creep into your mind. And it caused me, knowing that I had a $1,000 cushion, it made me hang on to this a little bit longer than I should have. Well, a lot longer than I should have. Knowing that I had this big cushion, I just try to let it work. Ended up stopping me out. And I gave back half of what I earned here on this one trade. Just being stubborn. So I know the question is, some of you may be asking, well, where should I have gotten out? And the answer is, as soon as I made a higher low here on this pullback. We bounced here, rejected the 100-day, we pulled back. Once we put in this higher low and we're starting to push up, that's a definite change in momentum. Definite. And I ignored it and tried to hold on to it and ended up getting stopped out. So going into lunch, I wanted this to fade. I didn't think we were going to really go anywhere. So I got in and, I kind of held it. And as we made this move up, if we had claimed this level, I was going to stop out. Really, I might have had my finger on the trigger if we made a higher high relative to this candle. But it didn't. It rejected. And so I held on to it. Once we got significantly through this level here, I added back. Added to this, didn't add back. And then just kind of took my profit at strategic points along the way. Kind of missed the 200 here. This thing washed out pretty quick and I kind of missed it. But still a decent, good trade. I caught the meat of this move. And that's what we're looking for. I didn't quite top ticket and I didn't quite bottom ticket, but I got the meat of the move. And so the last trade I got in, to hold to the end of the day. And because this stock was just trending down. So under the 200, I felt was safe. And just let it work. And I took it off at 356. But the last minute, we dropped all the way down to 66.11. So I gave up about 30 cents, which is, on 500 shares, that's $150. So I kind of gave up, $150 right there, just by, covering when I did. But better be safe than sorry. So nice recovery on this. Still didn't get back to where I was after this first trade, or these first two trades. But I'll take it. Not bad at all. The second trade I took was HAS. And we'll look closer at the opening trade on this. I didn't trade this at the open. I waited for the pullback and the trend continuation. And, before I went to lunch, I told everybody, this is what I'm looking for. This is what I'm waiting for. I was hoping I could get it sooner, but, I couldn't. And, first target was this level up here, 150. And, the next level was going to be through 101 ultimately I was looking for 102 up here, but just never had the confidence in this to hold it. Now, some people in the room held it and, really made some money on the move up, but I kind of gave up on it a little bit too soon, and only booked 248. But for the day, after commissions, 1166.58, not a bad day. Could have been a lot better, as usual, but kind of recovered from the earlier, setback and made it happen. So here's the opening trade I was telling you about. Here we could have used the 5-minute opening range and got in here. We never did pull back below it and pushed it straight up. Or if you took the 15-minute, the high would have been here. You get in on a break of the 15-minute high. Still another move up. But you can see this thing kind of put in a flag here. And very nice flag break on the 5-minute opening range high. You got two solid strategies, technical strategies working together. And that usually gives you a solid move. So I didn't trade this. I know a couple people in the room did trade it. I was still stuck. I tend to get tunnel vision and I'm working one stop. Once I feel like that one stop can pay me, I'm going to work it. But this was just another one that gave us a good opportunity at the open. And you see I did trade it later in the day. And it really would have worked out if I had more patience. But just wanted to share that with you. Now the swing trade, I did win in the swing account. Slowed it down like we talked about in class a couple weeks ago. Slowed it down to the 30-minute chart. And still kind of messed it up. I really kind of messed it up. But this was a product of me trying to do too much at one time. And I ended up getting in here, selling some up here. But when I was trying to sell, I bought like I'm short. I was going to buy the cover, ended up doubling my position, and I took it off, right then. So I had to take profit and then put my stop back at break even. So I had to get, stopped out here. And then, don't ask me why I went long here when this is clearly going short. But for some reason I bought it long. And, ended up covering let's see. Oh, these are jumbled up here. I ended up covering or selling all 500 right here. Just never did get the move I wanted. And it was at 177.91. So not too good. But we did add 511.64 to the bottom line. And somebody asked me yesterday, they emailed me about putting together the swing trades and the day trades together, and what I'm getting paid out of both. Okay, at the end of the month, I take a paycheck from both accounts. So you add both of them together, that's going to tell you what I made this day. And there are some people that are now day trading and swing trading together. You can get some pretty good paydays out of the swing account once the market gets going and gives us some opportunities on the strategies that I trade. Now there are many strategies you could swing trade. but I stick to the simple ones, and we've only gone over the longs. Even though I take some short here and there, we've only gone over the long setups, but the short setups are just the opposite of the longs. So you just flip it, and you got a complete package here. Now SCG, I'm still holding those shares from yesterday. I didn't cover anything, but right now it's saying we're minus 85 because the market is closed. And so, the bids get pulled and you don't really get an accurate depiction of where you are in the trade. But not bad. I'll take it. I was trying to get an all-day hold. And those you like to get, anywhere from $1,200 to $1,500 on, if it works. But that didn't work out. Let's see. So altogether today, 1678.22. Really, really not bad. So I've got to enjoy these now, because when I start, trying out that new prop firm, I'm not going to trade as heavy. I'm going to take it a little bit cautious because I'll be with a new platform, and you need to be comfortable and confident in the platform before you really start ramping it up. So I better enjoy these now, while I can. All right, guys, so that's going to do it for me. This was my day. Looking to finish the week strong. Have a good Thursday and Friday. And this will be a real solid start to the month. So take care. Have a great evening, a great night, or morning. And we will see you first thing in chat.